Donald Trump's presidency has been marked by turbulence on many fronts, but few areas have seen as much chaos as his trade policy. Trump's weapon of choice? Tariffs, those often overlooked levies on imported goods. He wielded them like a blunt instrument, slapping them on Chinese goods in a bid to rewrite the rules of global trade. The problem? Trump's tariff strategy lacked any semblance of consistency. What started as a 54% tariff on Chinese imports quickly escalated to a staggering 145%. Then came the flip-flops. One day, consumer electronics were exempt. The next, they were back in the crosshairs. This erratic behavior, this tariff roulette, sent shockwaves through global markets, leaving businesses and investors reeling. The damage was immediate and far-reaching. Investors, spooked by the unpredictability, dumped US Treasury Bonds, sending interest rates climbing. Mortgages became more expensive. Credit card rates soared. Even the cost of servicing the already massive US debt began to balloon. The message was clear. Trump's tariff tango was jeopardizing America's economic future. The true cost of Trump's tariff wars extends far beyond the immediate impact on interest rates and debt. The constant threat of new tariffs, or the sudden removal of existing ones, created an atmosphere of pervasive uncertainty. Businesses, the engine of economic growth, found themselves in uncharted territory. Long-term investment, the lifeblood of any healthy economy, dried up. Why build a new factory in America? Business leaders wondered, when the rules governing trade with China could change on a whim. Why expand operations when a sudden tariff hike could wipe out your profit margins overnight? Instead of investing in growth and innovation, businesses were forced into a defensive crouch. They delayed procurement decisions, stockpiling parts to insulate themselves from future tariff hikes. This hoarding of resources further hampered economic growth, creating a vicious cycle of uncertainty and stagnation. The electronics sector, a cornerstone of the global economy, provides a stark illustration of the damage inflicted by Trump's tariff capriciousness. Initial exemptions for smartphones and computers offered a glimmer of hope, only to be snatched away days later. This whipsawing of policy left businesses scrambling to adjust, further eroding confidence in the US as a reliable trading partner. China, for its part, was not content to sit idly by as Trump upended decades of trade norms. Retaliatory tariffs, some as high as 125%, were swiftly imposed on US goods, effectively slamming the door shut on American exports to the world's second-largest economy. Farmers, manufacturers, and tech companies alike found themselves caught in the crossfire, their businesses collateral damage in Trump's trade war. The repercussions of Trump's tariff tantrums extended far beyond the shores of the United States and China. Allies, long accustomed to American leadership on the global stage, watched in dismay as the rules-based trading order unraveled. Trust in the US as a stable and predictable partner plummeted. Investors, seeking safer havens for their capital, began to shun US Treasury Bonds, traditionally seen as a bedrock of stability. Instead, they poured money into alternatives like German bonds, further undermining the standing of the US dollar as the world's reserve currency. This shift, while gradual, reflects a deeper erosion of confidence in America's long-term economic prospects. The damage inflicted by Trump's trade policies will take years, if not decades, to repair. The scars of lost trust, diminished investment, and strained alliances will continue to shape the global economic landscape for years to come. The world is watching, and it remains to be seen whether America can regain its footing as a leader in the global economy.